question. I think the simple answer is whenever is needed and whenever the investment case for ideas in our portfolio or in a client portfolio changes. If suddenly the investment case isn't there anymore, or we think there's a better idea, we would recommend a change. But it's important to note that just because a company has a bad quarter or even a bad year doesn't necessarily mean the investment case for that idea has changed at all. Every business will have a period of time where it doesn't shoot the lights out and post record earnings quarter on quarter. So, but that doesn't necessarily change the underlying investment case for the story, and doesn't mean necessarily that it would be changed out from a client portfolio. On the larger end of the spectrum, the blue chip names we've been talking about today, a low turnover is often best. The more often you change a portfolio and try to time things and move out of different names and into others, I often think translates into lower investment performance. What you want to do, as I said earlier, is give the ideas in your portfolio a chance to grow. And really, time is the best friend of a quality company. So give it a multi-year chance to do its thing. As you move down the market cap scale into mid-sized or smaller businesses, you can see a slightly higher turnover in portfolios, and sometimes you need to be a bit more reactionary to changes in the story of the business or the regulatory environment, or really kind of the management team. So being slightly more reactionary on the smaller end of the market cap scale is something that we do see. But again, if you've done your research correctly and you see that the underlying investment case for your idea, give it a chance to grow, and stick with it, have the power of your conviction, and stay with your investment idea for as long as possible. I think Charlie Munger says it best, that the best returns are made in the waiting rather than the buying and the selling. In our larger company portfolios, we target about 30 or 40 different names, and of which 12 or so of those ideas we would say are core ideas that should sit in portfolios for many, many years, if not decades. So you'd naturally have a lower turnover on a portfolio like that. But in a given year, you may well see 3, 4, 5 different changes to the sets of stocks in your portfolio. Or you may see none, depending on how the years unfolded. We have a very active research department and a very active analyst team who are constantly looking for the best ideas. So you will naturally see new ideas being included in our buy list and our research list every year. It doesn't necessarily mean that the changes have to happen in portfolios, but speaking to your investment team and your advisor regularly will ensure that you always have our favoured thinking